What's up, guys? JJ Fade 23. This is going to be a red flag criteria video for small caps. I'm just going to show you the red flag criteria sheet that I've made and then go over. You see this? Another thing, guys, remember also I'm not a financial advisor. I just like to make videos about trading. So you have your scanner from Trade Ideas, okay? Now, this is my biggest percent gainer scanner, and this is my gapper scanner. As you can see, it's color coded to tell me it just to make it easier for me, it shows me the red flags already, even though I still do this every morning because not all this is on here, but the ones that I have on here are on here. See, this is like BATL, institutional ownership is over 50%. It's a red flag. Now, if you watch my video for A plus shorts, you know that I like it less than 30%, but over 50% is a red flag. So if you look at this today, like in the morning, let's say in the morning, this would have only been a lot less volume, NBY. So the only red flag would have been price because it wasn't $1.50, but the rest would have been greenlit because in the morning, the volume would have been lower. So the volume might have been over 10 million. So that might have been a pre-market. So that still might have been red, but that's like, you know, the volume over 10 million happens all the time now. I don't really consider that a red flag, but I want this to show me, hey, just so you know, it does have a little higher volume. So basically then I copy and paste these sheets on OneNote. I add in the ticker, and then I just go through the, wait, where'd you just go? And then I just go through the, oh yeah, that's because that was behind it, sorry. I don't need that right now anyway. Then I just go through it, all right? So like I just start at the biggest percent gainer, and I take a look at the chart, and then I don't do it for every one if I know, like, okay, I look at the chart and the chart's horrible. If it's super beat down or like a reverse split happened yesterday because I don't trade reverse splits, then I'll just maybe set a price alert on this that I possibly would trade this on, but that's it. Now the ones that look like they could be a trade, right? Then I will just go over to a red flag criteria sheet and I will go through it, all right? The price. I will put the price. Let's use LFLY again for example. 320. That's good because we want it to be from $1.50 to $10. All right. I'll check if the company's from America or not. If it's not American, it's a red flag. All right. So basically, you guys, Trade Ideas will tell you all that. So this will say like USA. Or I won't usually write USA, but if it's a different company, if it's USA, I won't even write it. But if it's China, I'll put China, and I'll just mark it, right? I'll put China and I'll mark it, red flag, okay? Then I move to price, $1.50 to $10. If it's less than $1.50, it's a red flag. If it's over $10, it's a red flag. Market cap, 8 million, all right? If the market cap is less than 250 million, it's good. If it's over that, it's a red flag. The gap is 80%. Gap stats, there's only one gap stat on this. A lot of times when there's only one gap stat, it's not a red flag, but I'll just put like maybe a couple of yellow things just so I know, okay, this thing doesn't have more than like, doesn't have a few gap stats. It's only one gap stat. Can I really trust the gap stats if there's only one? I'll also do average spike. The average spike on the gap stats, 38%. I'll mark that as a warning because this thing has a high average spike, and it's also a higher average spike than there is an average fade, which doesn't necessarily mean I won't trade. I'll just be aware at the open, okay, this thing has a high average spike, but it's only one gap or so. Can I really trust these, you know? So that's why I don't like only one gap stat. It doesn't stop me from trading the stock, but I necessarily like when they have at least 4 gappers or something or more. And then moving down, pre-market volume. If this thing gets over like, I used to have it at 10 million, I don't mark it as a red flag, guys, because like I said in the other video, the pre-market volume doesn't mean shit because a stock can have 20 million shares traded pre-market and then open and it only trades $500,000 candles and then it quickly dies and it doesn't trade shit for the rest of the day. So the pre-market volume has never changed the data for me on back testing. It doesn't mean shit if you ask me, because it's all that matters is the open, how much volume's coming in. Is it going to keep that insane amount of volume coming in, or is it just going to start to fade right away? So now the float, as you see right here, guys, the float on this was less than 3 million, so that's a red flag. So that would be one red flag because it's not a China stock. The price is right. So we so far on this only have one red flag. Now, if we get to 3 red flags, we kick it because it's a red flag criteria. Institutional ownership on this 6%. It's fine as long as it's less than 50. It's not a red flag. Insiders 13%. As long as it's less than 50, it's not a red flag. Short float less than 10%, not a red flag. SSR, no red flag. If it was yes, it would be a red flag. Easy to borrow, no. If it was yes, it would be a red flag. And guys, if it was easy to borrow stock, it would be a red flag that automatically red flag criteria. Easy to borrow, don't trade those, don't care. So that is one indicator that I will not trade. I hate easy to borrow stocks, and I just will automatically red flag this thing out, okay? So, nope, volume resistance. Guys, volume resistance, that means this. Let's pull this chart back over. Volume resistance, that means, okay, let's say I'm looking at these pivots, all right? This stock right here, it did 36 million on this day. This is the level I'm watching, all right? But this one, 36 million, guys, is okay volume resistance. It's not really high, but it depends on what it's doing for volume already. So I think at the time, I forget what this ended up happening in the pre-market. Well, let's go look real quick. One sec. Okay, so this, yeah, see, pre-market volume was 5.4. So really, that is actually decent because if you think about it, right? If you have a stock that had a 36 million volume resistance today and it's only trading 5 million in the pre-market, well, that still has to go through 7 or 8 times the volume to break to be higher than this day. So I consider that actually does have volume resistance. I just like it to be a little higher. So this one will say yes, 36 million at $4.22. All right. So now when I say that, that doesn't mean that obviously the resistance is just right here because this volume, guys, was done in this whole day. So the volume to me, I look at it like this. The volume is in here. It's inside this whole range, right? So where are the bag holders? They could be anywhere in here, really, unless you want to break it down to go look at the hourly chart and go back to this day and find the high consolidation volume areas. You can do that too. It's just more work. So let's go like this. Now you have this 422 day. Let's break it down to the hourly. Actually, you know what I'm going to do? I'm going to take off the pre-market data for a sec. Okay, so now you see, all right, guys. Now you look at it this way, you can see kind of, right? Now, see, that's just a quick top and tail, so you could kind of go like this. You can really zone in, even if, or you can use volume profile, but you can kind of see, right? This is really where the most of the volume was done that day. It broke over a little, then fell back below. So you can do that too, but I like to just use it as the resistance, even though I know it's not all done at the highs, but I would just say, okay, 36 million at 420, and just know it's in a range from here. All right. Now, if it has 80 million, 100 million, even better. Now, if this was a 36 million volume day, but we were doing 20 million in the pre-market, I would just say no. There's no volume resistance because we're already like almost up to that whole volume, and the market hasn't even opened yet. All right. So next, I will move to key levels, and then I'll just go like this. Sorry, key levels. We're right around this price over here at 350. I would just say, okay, key level 420, like I did right there, and then 433, and mark these pivots off. Because guys, remember again, the most clearest pivots, boom, boom, and then I would even mark this because this is a $0.50. It's also a multi-touch pivot, and it's old support that broke and never been retested. See, touch, 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 touch. It's a $0.50. Support breaks and becomes resistance. It never got actually retested, almost right there, which is pretty close enough. But so I would mark the next few pivots up, and then we have an ultimate low pivot right here, meaning that's a down pivot at 480. And I don't go mark off the whole chart. I just do the next few because, you know, a lot of these stocks never make it past the first couple. If it does make it past it, then I'll go up here and find the next pivots. But by that point, if this stock opens and blows past these pivots, by the time it gets up here, it's probably going to be past. I might not even be traded anymore anyway. It might be 10:30, 11 by the time it gets up here. And now I would only trade it in the afternoon. I don't take entries between 10:30 and 1:30 because stocks usually don't fade at those times. If they break past 10:30 and start grinding, I'm only looking for a late day fade. So I'll mark off my pivots. I'll write them in here, the next couple up, and then we'll look at the dilution tracker and see what dilution tracker has to say. If it's something that I'm more concerned about, I'll look in the filings and see exactly. This stock had a low risk for dilution. They did have a low risk, low, even though it faded all day, but they didn't need cash right away. They had 13 million. Also, guys, another thing that I will use, I will look. Let me show you real quick. So now I'll have the pre-market data on. As you see right here, guys, see that 1 minute 200. So look. Oops. Sorry, I'm usually using DAS Trader for this, so I'm just going to show you real quick. This helps you judge how extended we are, okay? So if you look, this is the 1 minute 200, you guys. At the open, we're sitting right on the 1 minute 200. Normally, I want to be extended off the 1 minute 200, but a lot of gap and crap setups, guys, this was a gap and crap setup because it already sold it off in the pre-market. If it was a gap and extend setup, it would be up here still or within the top 15% of this high. So it would be more extended off the 1 minute 200. Normally, I want the stock to push off the 1 minute 200 or open off the 1 minute 200. That makes it even better. It's not a red flag, but it's better if we have if this is like 20% off the 1 minute 200, because that means, right? That means basically we'd be like this. That means basically we'd be open up here. We'd have a gap to the 1 minute 200. So that's good. So now if you have a gap from the 1 minute 200 and it tries to spike, now you're even farther off the 1 minute 200, chance of fail high. Okay? So that's what that means. And then I'll just write my notes, all right? I'll write only one gap stat. I don't really love that. Has a small float. It's less than 3 million, but very clean recent pivots. I like to see, but I need to pop the lower high position. It's Friday, so I'm the boss. Basically, that means, guys, on Fridays, I'm extra picky. Friday price action can be a little crazy. I'm extra picky. Ideally, the best setup on this would have been this. You put your fibs on. Ideally, this would have popped up to the 61 fib plus. Give me a great risk reward off this. Now, you could trade it lower, but you have to look for a trigger or an entry. You don't really want to just jump in right here, because where are you risking off right here? And then you're going to risk off pre-market high. That ruins the whole trade. The risk reward sucks. Now, ideally, you get a stuff candle or a fake breakout. Maybe it breaks over this high right here. Right? Boom, and then it fails back below short. Put your stop above. But the best setup would be if it spiked up to here. Now it's extended off the 1 minute 200. Now you can risk off the true place it failed and the daily pivot right there, and then look for the fader. Now, then I will just come down to here, you guys, and say strategy, gap, crap, because we're opening more than 15% off the pre-market high. Entry would be spike to lower high position or trigger at key level below lower high position if you want. Now, I don't do that on Friday, but you can. Risk depends. Either pre-market high if we get to lower high position, or above trigger candle. And then the first target on this, guys, now look, right? If you see a stock, all right, guys, you see a stock that likes to, we can't see this day right here, all right? This day happened now, all right? But we can see this day, we can see this day. So based on these days where it spikes and comes back down, and it closed like pretty low, but not all the way at the low, I would say first target, 5 minute 200, and then second target, end of day. Because we're already too close to the 1 minute 200. Remember, the 1 minute 200, guys, was right here. So we're not going to use that as our first target. We're going to go like this. 5 minute 200, first target, second target, end of day. Or you can make, like I said in the other video, or always end of day, which will pay more in the end. So first target, 5 minute 200, final target, end of day. Now, guys, I like to track this, all right? And I think you should too. At the end of the day, what was the volume? Okay, the volume was 30 million. So I come down here, end of day volume, 30 million. Now I look at the pre-market volume was 5 million. So that was 6 times the pre-market volume. I just like to make note of these so I can kind of get an idea of, like, when I see the volume in pre-market, what the volume at the end of the day is going to probably be, and that compare that to the float and like other volume resistance on the chart. So the more you track this, the better. And then I will just write execution, grade myself, A, B, or C. Did I stick to my plan perfect? Or did I do okay? Was my entry perfect, or was it okay? B. And then my exits, did I wait for my targets? A, or did I start covering too early? C. And that's pretty much it. Then I save these with the chart, the screenshot of my execution arrows, and then the daily chart in OneNote. I'll save the daily chart, guys, the intraday chart with the execution, and then the 10-minute chart, which everybody knows I love the 10-minute EMAs with the pre-market data off. That's for another video. I have other videos about that. You'll see a lot of times, you guys, these stocks, if you take the pre-market data off on the 10-minute chart, a lot of times they come back to the 10-minute 21.34, and that's where they start to like tick up. This one went through them because it was a great all-day fader. But I will save this chart. I will save this chart so I can see, hey, this stock rejected these pivots and it rejected that pivot in pre-market. And then I will save the intraday chart on DAS, which has like execution, cover, and then grade myself on it. That way it's great for review. And that's how you get better, right? You review your trades, you look at your stats, and you practice, guys. Staring at stocks while they move during the day is going to make you a little better, I think, just by screen time and watching. But it's the work that you do behind the scenes that really gives you the confidence to be a great trader and to take the trades that you know will work or that you think have a high probability to work. So this is my red flag criteria sheet. It works good. It keeps me out of so many trades, guys, that squeeze to the end of the moon. You know how many stocks that I red flag criteria, they squeeze 300%, 400%. Everybody's blowing up, and we all stay safe in the room because we use the red flag criteria. So it doesn't have that's just, for example, you get a stock that has 50 cents, red flag. Shitty gap stats, red flag. Pre-market volume high, red flag. Acquisition dues, red flag. Red flag that shit, and then you watch. It's a pain in the ass headache most of the time during the day, and everybody in the room is like, oh shit, dude, you saved us again from taking shitty trades. Well, that's very easy to do just with red flag criteria. Now, don't get me wrong. Sometimes these stocks still just fade, and you go, whatever, who cares if you miss a trade? It doesn't cost you anything to miss a trade, right? A lot of small caps fade. That's what they do. But I'd rather miss the ones that fade and stay out of the ones that rip people's faces off and blow up their account than the other way around. Try to trade everything and then blow up one day and then win 5 trades, then blow up. It's like Chinese stocks. I hate Chinese stocks. I don't trade Chinese stocks. I've seen so many people blow up on them. Well, guess what? A lot of Chinese stocks fade, but I don't care because I'd rather trade all the ones that fade and not be in the ones that are going to rip my face off and put me on tilt. And that's just the way it is. I'm willing to give up a lot of faders just to not get caught in that one. And that's it. I don't care. So that's it. If you want a copy of this, hit me up and I'll send it to you, or you can just make your own. It's pretty easy. All right. Guys, have a good weekend. Remember, stay off the screens on Sunday. Relax. Sunday night, stop prepping, but I would get off the screens, enjoy your life. Don't be a degenerate who can't get off the screens and makes yourself miserable. All right? See ya.